Welcome to Charts from the Media. Today is February 16th, 2014. We will be looking at GMCR, Green Mountain Coffee Roasters. We will take an investor's view, not a day trader's view. This stock has had high volatility and strong price action in the past 2 weeks. We will do a long-term versus short-term review, fundamentals, and the charts. The charts that we'll look at are the weekly chart with past high and trend lines, the daily chart with candlesticks, volume, and oscillators, and the third chart will be the point and figure. So the pros, reasons for owning Green Mountain long-term. The company has a $1 billion buyback program. It is a growth company that pays a dividend. The 2.0 system will start selling this fall. The cold system will be available to the market in 2015. Recently, Coke bought a 10% stake and will make its brand available for the cold brewing system. Now the fourth quarter 2013 let us know that a record number of brewers were sold. They had lower coffee prices, which improved the gross margin, and increased volumes drew higher profits. Now for the cons, the short ratio at the end of January was near 14. The recent run from 75 to over 120 likely contained short covering. Recently, price hit its prior high from 2011. The oscillators are in overbought territory. The nearest supports are a fair distance away from current price. Currently, the price is trading about 116, but it has a bullish price target of 98, and the stock has been up 155% in the past year. Our first chart will be the weekly chart going back a couple of years. Now, recently it's had some strong moves, and that's where that short covering came in. On the weekly chart, the oscillators are in overbought territory, but they have not given a reversal signal yet. The recent price has surpassed the 2011 all-time high, and it is currently trading about 45% above its long-term trend line and well above its moving averages. Breaking it down to look a little closer at the daily chart, here we have that large gap up. It ran all the way up past 120, and this recent candlestick here really pulled back. So it actually closed below the candlestick before. So we had a new high, and then the next candlestick closed below that entire candle from the day before and the one before that. So this would be a bearish candlestick here. So even though the stock market was up about 0.5% on Friday, this stock still traded down. It has had lower volume during the up move, so it appears to be losing steam. Now this stock has a very long base, so once it gets going, it has room to go. So again, this stock looks good for the long term when you look at the fundamentals, but at this entry point it does seem to be risky. Looking at the current oscillators, definitely high overbought territory, but again, not giving a full reversal signal. With looking at the price action that this stock has had since just the beginning of February, again, it looks to be a risky entry area at this point. Here's a look at the point and figure chart. It had a bullish price objective, which was met at 98. This had a very, very strong run all the way up, and here we have some retracement. Looking at where this move started from, down here is 78, went all the way up to 122. Even if you had a 50% retracement, that would bring it back down to 100. So again, an interesting stock to own, just maybe not at this price. Thanks for watching. Visit chartsfromthemedia.com for definitions, learning tools, videos, and more.